Goerli Ether has surged in price to over $1.60 in the past week. It has reached a market capitalization of $15 million and attracted criticism from the crypto community. The tokens are a testnet version of actual Ether. They are meant for developers to simulate Ethereum transactions and activities prior to deploying on the mainnet. Layer 0 created a swap product to make it easier for developers to access the testnet. Speculators have since taken advantage of the token's value. As a result, NFTs and meme coins have been developed on the Goerli network. This article discusses the recent surge in the price of Goerli Ether, a testnet version of the cryptocurrency Ethereum, and the criticism it has attracted from the crypto community. It explains that testnets are used to simulate real-world blockchain usage, allowing developers to find and patch critical bugs before deploying their products on the mainnet. The gETH market was created by the cross-chain trading platform Layer 0 to make it easier for Ethereum developers to access testnet Ether. The article also examines how speculators have been using gETH as a leveraged bet on Ethereum, and how some have even created NFTs and meme coins on the Goerli network. This article provides a comprehensive overview of the recent events surrounding gETH and its implications for the Ethereum ecosystem. The plaintiffs have argued that the proposed Amicus Curiae briefs are procedurally and substantively improper. Furthermore, gETH has falsely claimed to be representing a putative class of 75,890 XRP holders. The plaintiffs in the Ripple lawsuit have made a strong argument against the proposed Amicus Curiae brief. They contend that the proposed brief is procedurally and substantively improper and that the claims made by the non-parties have nothing unique or relevant to offer. They further argue that the claims of representing a putative class of 75,890 XRP holders misrepresent the court's order in the related SEC action. It remains to be seen whether the court will grant the motion and allow the non-parties to submit an Amicus Curiae brief in support of the defendant's opposition to the lead plaintiff motion for class certification. Alchemy Pay has obtained a license from the Central Bank of Indonesia to operate remittances and fund transfers. It is in cooperation with local fintech firm Bbaco Digital Pembayaran, allowing the firms to offer better payout methods and reduce associated operating costs. Established in 2018 in Singapore, Alchemy Pay is a major global crypto to fiat payment platform. It is known for partnerships with crypto giants like Binance Exchange, and operates its own utility token, Alchemy Pay. This article provides an overview of the recent news that Alchemy Pay and Bbaco Digital Pembayaran have obtained a license from the Indonesian Central Bank to operate remittances and fund transfers. It highlights the capabilities of Bank Indonesia in providing licenses to payment providers, as well as the services offered by Bbaco Digital through its BD Pay platform. Additionally, it provides information about Alchemy Pay, such as its cryptocurrency on-ramp and its utility token, Alchemy Pay. Overall, this article provides useful information about the recent developments in the Indonesian fintech industry. Last week, according to crypto asset manager CoinShares, short Bitcoin funds saw inflows of $10 million. Outflows from long positions reached $12 million. This comes as the price of Bitcoin fell below $23,000, its lowest point since February 15, as investors reacted to strong economic data in the US. Liquid staking is now the second largest crypto sector, overtaking decentralized lending and borrowing. A total value of assets locked on blockchain networks is now reaching $14.1 billion. Additionally, Texas regulators raised questions about Binance US proposed acquisition of bankrupt lender Voyager Digital. They cited concerns over the staking program. This article evaluates the recent changes in the crypto market, particularly with regards to the inflows and outflows of funds for short Bitcoin positions and the emergence of liquid staking as the second largest crypto sector. It also discusses the reactions of U.S. investors to the stronger than expected macro data releases and the regulatory crackdown in the U.S. Additionally, it examines the concerns of Texas regulators regarding Binance U.S. proposed acquisition of Voyager Digital and the implications of Alameda Research's recovery of $446 million transferred to Voyager prior to its bankruptcy. The article concludes that the benefits of the acquisition to creditors may be negligible and that Binance's staking program may constitute an illegal securities offering. Bitcoin saw further gains at the Wall Street Open on February 27, with the pair reaching highs of $24,000. Stocks were also gaining strength, which resulted in the potential for Bitcoin to finish February on a high. Popular traders and analysts were cautious when it came to the overall uptrend. Some were arguing that stronger signals were needed before going long BTC. US stocks were recovering ground and the US dollar index was dropping, providing a boost for risk assets across the board. Changes in the correlation dynamic between DXY and BTC were also highlighted. This article provides an in-depth analysis of Bitcoin heading towards $24,000 at the February 27 Wall Street Open. It looks at the lows of $22,770 on Bitstamp over the weekend, and how the weekly candle closed above $23,500. It also looks at the opinions of popular traders such as Crypto Tony and Decentrator, as well as the impact of US stocks, the US dollar index, and the correlation dynamic between DXY and BTC. The analysis provides helpful insight into the current state of the crypto and stock markets. Coinbase's Q4 2022 results were not favorable. Net losses totaled $557 million, with a 75% year-over-year revenue decline to $629 million, and a 74% decrease in trading volumes to $145 billion. The price of Bitcoin, the bellwether cryptocurrency, has been down by almost 60% over 2022, leading to a pullback in trading activity. Coinbase's market share has also fallen from 5.9% in November 2022 to 4.1% in February 2023. However, there appears to be a small improvement in the crypto market early in 2023, with Bitcoin prices up by 45% year to date. Despite this, Coinbase stock still remains 80% down from its all-time highs seen in 2021. Investors should consider factors such as the resilience of cryptocurrencies, the potential for extraordinary profits during good times. Additionally, they should consider the bankruptcy of several small players, which could help more established players such as Coinbase. This article provides an in-depth analysis of Coinbase stock's tough Q4 2022 results, which were caused by a rout in prices for cryptocurrencies such as Bitcoin. It explains how Coinbase's market share has fallen due to the company focusing more on retail traders than offshore platforms that attract larger traders. It also mentions that Coinbase has seen some improvement in early 2023 with more retail investor participation, but that the stock is still down by almost 80% from its all-time highs. The article concludes by providing some key factors to consider before investing in Coinbase stock and suggests Treffi's high-quality portfolio and multi-strategy portfolio as an alternative.